I welcome you to this most important course in finance and accounting, financial management. The course code is PFN 318 and the topic is Introduction to Financial Management. The course lecturer is Professor Roseluka Desi Shomoye. Financial management is very essential in any organization without which no firm can be on a sound footing. A firm needs to be on a sound footing to be able to record maximum wealth and profits. The course covers 13 study sessions. These include Introduction to Financial Management, Financial System, Analysis of Investment and Risk Identification, the capital structure, what is the structure of your capital? We'll discuss this in the subsequent sections. Dividend policy decision, working capital management, and financial statement analysis. Others are principle of valuation, corporate restructuring and reconstruction of any firm, whether for expansion purposes or re-engineering. We also have international financial management, contemporary development in financial management. We've had so many things coming up, a financial system all over the world, cryptocurrency and the rest of that. We also have finance for small and medium scale enterprises, SMEs. And then lastly, Islamic finance. Let us go straight into the introduction of financial management. And before we do this, we need to understand the significance of this particular course, financial management. It is an integral part of finance and the lifeblood of any firm. It is essential to smooth running of any business. Now we can define it. It is the identification of possible strategies capable of maximizing the organization's net present value, the allocation of these resources among the competing needs and opportunities, and the implementation and monitoring of the choosing strategy so as to achieve the stated objective of the firm. It is essential that when a firm wants to grow, it needs to optimize its financial structure. We shall continue to discuss that in the subsequent section. What are the roles of the financial management? It is to provide us solid financial decisions. To be able to make it, a finance manager must be able to ensure maximum mixture of debt and equity. That's the financial structure. Capital structure we are mentioned in the topic. To ensure maximum returns to the shareholders. Financial management allows us to make investment decisions, informed decisions, to be able to identify viable projects. And once we have made financial decisions, investment decisions, we need to make dividend decisions. The shareholder needs returns on their investments. This will allow us to determine appropriate amount of dividends to be paid to the shareholders. It also allows us to know the asset to acquire for internal and external growth of the firm. And of course, the firm needs working capital management procedure. We need to know the amount of cash required for the adequate running of the firm for efficient, smooth, and profitable level. We need cash on daily basis to buy those things that are short-term needs of the firm. It also enables us to know what level are we. Is the firm running appropriately well or not? Is the capital structure efficient? Have we made adequate working capital? So for financial control and decisions, the firm needs to have control over every level of activities of the firm. And the financial manager must be able to handle this efficiently. What are the types of finance we have? We have private finance, which is for individual, firms, business, or corporate financial activities to meet the requirements of individual and the firms. We have public sector finance, which is normally called public finance, which covers the activities of financial sector of the government in terms of revenue and payment of government at all levels, such as local government, state government, and federal government. Without them knowing what they have, budgeting becomes a nullity. What are the objectives of financial management? We have mentioned that before: wealth maximization, profit maximization. These are the key aspects that the financial management drives. It drives how the firm can maximize the wealth of the firm and the shareholders can maximize their profits. We now go straight to the concept of financial planning. The major difference between the accounting subject and finance subject is that finance looks at the financial activity of a firm from the rear view by preparing historical statements Whereas finance is constantly engaged in doing what is called pro forma analysis or what if scenario. In other words, finance is to estimate the risks involved in any financial decisions. And once again, I want to repeat, the main activity of finance is to reduce risks in all decisions that we make in any firm. That is why we have models. We develop models to be able to situate our activities in the context of available variables. Are we planning well? Do we have adequate resources? Is the stock properly controlled? These are things the financial planning we handle, and the modeling aspect of that, we handle that as well. We're now going to the importance of financial management, which covers what we have said earlier: financial planning, acquisition of funds, adequate funds, then proper use of these funds in such a way that we can maximize our return and the shareholders' wealth can be also maximized. We then make appropriate financial decisions, improve profitability, increase the value of the firm, and promote savings. These are the summaries. These are things that are necessary in financial planning. Financial planning is very essential. Acquisition of funds that are to be used are very essential. And we need to estimate, by using financial modeling, the proper use of these funds so that we can make appropriate financial decisions. Thank you. God bless you.